Understanding average true range and volumes can be a major benefit to any trading strategy. Just a reminder, trading products with leverage involves a high level of risk. You may lose more than your invested capital. To start, let's take a look at ATR on your Blackwell Global MT4 platform. In this case, we are looking at a daily chart on pound Swiss where we can already see a variety of heavy days and slow days in the Forex market. To see this in a graphic form, we simply need to launch the indicator Average True Range from MT4's list of standard indicators under Oscillators. Always launch this on the daily chart. The default setting is 14 days. Many traders prefer the 20-day ATR as it looks at the last month of market activity. If we mouse over the indicator, we can clearly see increased ATR, which is logical looking at this huge bull run over the last couple of weeks. The ATR at this point is 130 pips. If we look back to a slower period a few months ago, we can see that the ATR dropped to 77 pips. This difference in the daily range of price action can often dictate which type of strategy may work best for you. For example, higher ATRs are typically better for breakout and momentum trading, while lower ATRs may have traders looking at ranging strategies. However, as a lagging indicator, it can be fooled, so be careful. If we look back at the 2016 pound flash crash, we can see that the ATR had a huge jump but settled down 20 days later when this high volatility day was discounted, and similarly, the Brexit referendum caused distorted readings. In general, monitoring average true range of your favorite pairs can provide a trader with good insight and may help determine a strategy. If we look at a pair with a typically high ATR like pound yen, we can see that it ranges from almost 200 pips down to 100 pips. Euro Swiss, on the other hand, ranges from 98 pips down to around 30 pips. This does not mean that one is better to trade than the other. It just means that your risk management, if you measure in pips, will be different, but the same plan should apply. Now, let's look at volume on MT4. Volume can be viewed on any MT4 chart by right-clicking and selecting Properties, Common, and Show Volumes. We can now see an array of green lines on the bottom of each graph. Keep in mind that Forex is an over-the-counter market with no central exchanges, so we cannot see actual trading volumes. What MT4 is really displaying here is tick volume, or the quantity of price changes during each candle period. Many traders use volume, especially decreasing volume, to try to predict future volatility. A similar volume indicator can be launched from the MT4 indicators under Volumes. This is a separate window and shows two distinct colors where green bars are higher than the previous bar, indicating an increase from the previous period, and red bars indicate a decrease. Often declining volumes can signify larger moves on the horizon, which also can be beneficial when trading chart patterns. We can clearly see declining volumes during this pennant on pound yen and, as predicted, it left the pennant in the same way it came in and volumes increased. Also, increasing volumes can provide positive confirmation when trading breakouts from support or resistance. In conclusion, we highly recommend monitoring ATR and using volume as another confirmation tool in many of your strategies. We will be back with more soon. Happy trading with Blackwell Global.